Good evening, everybody. All right. We're still having a nice Christmassy evening here in Pittsburgh. A lot of snow on the ground. Lots of ice on the driveway. Susan, just a lot of chart programs will have the Fibonacci's on there. So if I go over here and hit the Fibonacci, I can see where the absolute low of the Dow trend was. At this point, I could see where the absolute high was. Now it gave me a line to the 38%, the 50%, and the 62%. And it looks right about at the 38% retracement. We had an inverted hammer and a buy signal. So I don't use the Fibonacci numbers to play off of. I look at to see what the signals are, and then I throw everything on here that might pertain to a reason why we reversed this level. In this case, it was the 38% retracement number. Don't know where the sheep are. The other day, there was only the 3 little ones, and they didn't have the 2 big ones, and they were lost. They were looking around for their mom and dad. Haven't seen them for the last couple of days, though. But we do have about 8 or 10 deer. There was about 15 turkey out there today. That's right. Okay, so if we look at this, that's not what I wanted to do. Let's get rid of these. All right, if we look at the market, I mean, today's up day was not anything unusual as far as we've had up days, down days, up days, down days. So it didn't really tell us much if you weren't a candlestick investor. What did we have today? Stochastics close to the oversold area. The Dow touched the 200 and did a bullish harami at the end of this downtrending channel. So to us, it's not just another oscillating day. It did a bullish harami and bounced off the 200. Basically tells us what we might expect with a much greater degree of probabilities, that if they open this positive tomorrow, they're confirming the bullish harami. And secondly, they're telling us that the T-line is not acting as resistance anymore. So we might have a little bit more incentive to be ready to buy on if we wake up and the pre-market futures for the Dow are up 60 points and the NASDAQ are up 12, that we might be ready to be buying on the open on charts that look good. Now looking at the other indexes, the S&P 500 didn't do anything significant other than the fact that it stayed in this kind of this channel. So we still have this wedge formation in progress. Is that right? The futures are off another 200. Let's take a gander here. Now I've got the futures off 40 right now. Morningstar Daily. All right. Oh, off the 200. Okay. I see what you're saying. All right. Yeah, so they're down a little bit, which isn't unusual for this market, that it really doesn't have any direction yet. But tonight's futures don't really matter that much. The only time futures are of great importance is about 3 minutes before the market opens. All right, and what we saw today in the NASDAQ was a hammer type signal. Staying, looked like it bounced right off the bottom of this little support level. So if this opened positive tomorrow, we're back into the move to the upside looking for this level. So that means we might have a couple days to the upside. And if we have a couple days to the upside, does that mean it's going to resist here? That we don't know until it gets there. So at least we have the visual analysis to say, all right, when it gets to this level, what is it doing at that point? And the transportation index also came up nicely, doing a bullish harami right here at this support level. So there's indications that maybe it's trying to find, these markets are trying to find support in the sense that they're all doing it at a support level over the last couple of days, or not the last couple of days, over the last few months they're using the same support levels. All right, let's take a look at some of the others. Bah, humbug. This is the dollar, still moving up nicely. Here's the one that you really want to take notice of, and we'll get back to this one. This is where you kind of observe the obvious. And the obvious was that crude oil has been resisting at the T-line for months, like well into 4, 5, 6 months. And then down here, notice what's happened. We've had this change of investor sentiment with a large morning star signal, a close above the T-line. Today they came back and tested the T-line again and took it back up. And right now, after hours, they're trading up a little bit further. So this right here gives us a completely new analysis of what's going on in this downtrend. That they're probably bouncing this somewhere. Now, where is that somewhere? Well, this goes back to Carol's question on Fibonacci's. Where are the targets? Targets are the 50 for the first target. Where could be the possible next targets? Well, if this is the peak, and this is the valley, or the bottom, here's your 38 retracement, 50% retracement, and there's your 62% retracement, which says if this market moves up like this, that maybe crude oil prices could come back up to the 200-day moving average, which would coincide with the 62% retracement. John will get to that here in a little bit. Now what was I doing? No, I'm going to take this back off. So anyways, that's how you use a Fibonacci number. Is there a bounce in crude oil prices? Looks like it. Where is it going to go to? I'd say at least to the 50-day moving average. If it goes through there, then where's our next target? All the way up here? Well, it might hit the 38, might hit the 50, and then it might hit the 62% retracement. Is March the current month? I think, what do they have? Apparently, yes. All right, what else we got? We got interest rates. Interest rates, the bond prices keep moving up, which means yields keep moving down. Gold, it's having a hard time getting out of its own way here. It did come back down and test the 200, but now it's back up to the T-line. And this might be the reverse bobble where they bounce it up to the T-line and then start taking it back down. So you start looking to short gold if it can't get through this level and get through the T-line. Galen, you got to remember, just because a commodity price is moving in a certain direction doesn't necessarily mean the industry is going to move in a certain direction. They may have made enough contracts with gold prices up here that what they're mining right now doesn't matter what gold prices are doing. There could be they've already got locked in some of their profits. What else am I trading? Right now I'm short February hogs. And this is, again, where you kind of observe the obvious. The obvious being that they have not been able to get this back up above the T-line. It tried right here and failed again. So we're still in a downtrend until we see a sell signal. Cattle had come up today, but then backed off. This is exactly why I use the 10-minute charts to see what's happening. We know that there was a downtrend. We know there was a bounce, and it looked like it was coming up above the T-line. But they reversed it. They were sitting right here at the T-line. It should have moved higher. So it was close enough to the T-line to still say, all right, it needs to definitely stay above the T-line to stay long. And that's, again, where I trade off the 10-minute charts, because this was the open today, where they opened it lower because they had announced that the cattle herds were 1% bigger than what they were last year, which is the first time cattle herds have gotten bigger over the last 5 or 6 years. So it opened lower, did the belt hold on the 10-minute chart, came up and took profits right here. Not because I was going to get out of the trade, but right now it was telling me they're coming back to the T-line. I could always buy it back somewhere where it did a J-hook, except it didn't do a J-hook. Stayed down. Do hogs and live cattle move some in correlation? Not necessarily. Usually when cattle prices are bringing a higher price, it's because hog prices are too high. And so when they start, that usually means that when cattle prices or hog prices are too high, cattle prices will start moving up and hog prices will start moving back down again. So most of the time they're inverse. Hogs, are you short? Where are you short from? I've been shorting it, for a while. Let's see, this was the 10-minute chart. No, this is the 5-minute chart. Let's go to 10-minute chart. This was the 10-minute chart on hogs. I started getting more interested because, remember, when they started failing right here, started shorting it, covered here because that looked like a bullish engulfing signal, and then re-shorted it from this point. But notice what we have here. We got a wave 1, wave 2, going into wave 3. Now we have a wave 1, wave 2, going into wave 3. Now, does this have any correlation to this wave 1, 2, and 3? Absolutely not. Just tells you the prices move in waves, and as of right now, there's nothing to show that there's been any change of investor sentiment that the hog prices are still heading lower. Oh, I can't think of what else to look at as far as the grains. Soybeans, still in a slow downtrend, but it's choppy, not very conducive to trade right now. So they tend to be negatively correlated. Again, all depends on the size of the herds. So today they could be negatively correlated. 3 months from now, they could be both moving in the same direction because both of the herds are either too big or too small. So, yeah, it doesn't really have a direct correlation. Let's see, silver. Silver, as you can see, is having a hard time. Once it hit the 200, came almost down to the 50, but they still haven't been able to get it back up above the T-line. Right now, I wouldn't be long silver, but I wouldn't necessarily be short silver unless it comes back down through the 50. And corn, nothing here. Notice that they had a big long-legged doji. I say nothing here. This might be your long-legged doji reversal. If I was short, I'd probably be covering, and then I just put my sell stop back below to this is after hours trading. It's only up a penny and 3/4. But as long as it stays below the T-line, I'd be more apt to go short. And that makes wheat. Wheat's still in a nice steady downtrend. Are you feeding the cattle with the rest of the critters? No cattle around here, just the sheep, the deer, and the turkey. What is a long-legged doji? Remember, a doji, what were we looking at? Corn? A A doji tells you there's indecision between the bulls and the bears. Usually a doji can be a small trader. When you see a big move like this, it tells you there's lots of investor sentiment going on, and they close it right at the same level. So that means there's even more indecision going on the longer that this candle is, the bigger the trading range. Platinum is less than gold, which is fairly unusual. Anything to note on platinum? No, I never trade platinum because, whoops, I don't think there's enough volume in platinum. Oh, that's platinum. There's nothing there that would get me long or short at this point. Now, they really don't have anything in correlation. Platinum is usually an industry sale, or gold is usually an emotional buy and sell. Okay, so with the markets still giving us indecision, still have both longs and shorts in this market, but the longs don't have a whole big ride to it, and the shorts don't have a big ride to it. So when you know that this market is not moving in any distinct trend, but it's lots of oscillations, you've got to change your investment. We did the dollar. The dollar is still in a nice steady uptrend. You just stay along with this. But as long as we know what the nature of the market is right now, whether it's the Dow or the transportation, it's telling us that there's not a whole long trend one way or the other, but we're still basically sideways. So if you can evaluate that and be able to see that, then you have to say, all right, what's that mean for my longs? What's that mean for my shorts? And it usually means it's going to last very long. The shorts aren't going to last very long, but you have to be ready to move in a much quicker time frame than we normally do. So if we can look at charts that were looking good, such as ADHD, and it was trying to hold up, but now we're closed below the T line. If this looks like a much better short than a long, you definitely shouldn't be in this position anymore. So this is just kind of, again, observe the obvious. Same scenario that if you were short on something like True, this is why we want to know what the nature is of each signal. Notice how we had a lot of dojis and spinning tops down here in the oversold condition. What's that usually tell us? It tells us there's a lot of indecision going on. We better start watching to see which way they're taking this decision, down further or taking it up. So the fact that they line after trading below the T line was a good time to close out that short position. The best of setups when the market turns, all bets are off. Pretty much, but that's why we also want to be able to analyze the market. This isn't quite a kicker signal. A kicker signal, I mean, technically it is, but a kicker signal, you usually want to see big candles and a big gap up and going a big candle going the other way. This is more just additional dojis with a little gap up doji type day. Let's see, hold on, I got to read my own handwriting here. Oh, and so this is why you need to understand a lot of people were looking to short G-Pro because it was starting to roll over. Except today, it closed back up above the T-line. So just looking at this logically, is this now a good short? Well, obviously, the trajectory for any pattern that we know of, like a bearish J-hook, has disappeared. This one should have definitely been closed out because of the strong trading today. How do you know when to take profits on dojis versus wait for a close above or below the T line? Based upon, what were we looking at? Based upon the fact that we saw there were dojis, and there was even a day where they had a doji gap up, but it immediately traded off. So what don't we want to see when we see a series of dojis? We don't want to see them moving it strong one way or the other. So at this point, there had been no trades or no closing below the T line or above the T line. But what could we assess about this trend? Well, first of all, the trajectory had flattened. There was lots of indecisive trading right here. with stochastics in the oversold area, we better be more prepared for a change of investor sentiment and be ready to close out any position that was now kind of confirming that this was a bottoming action. Would you have taken off some of your position with all the dojis? Not necessarily, because there's still our simple rule that we need to see a buy signal and a close above the T line. Well, at this point in here, even with all the dojis, there wasn't a buy signal being confirmed yet until they closed it up above the T line. Now, had the T line been up here, I would have still closed out this position, because that would have told me this is where they were coming out. Remember, the signal or the pattern is still your primary analytical tool. The T-line is just a confirming indicator. Sometimes the T-line is way far away from where the signal is occurring, so we don't wait for a close below the T-line. We know that if we have a doji in the overbought condition far away from the T-line, we better start setting our stops someplace that tells us that if they start confirming the signal, more than likely they're going to come back down to the T-line. G-Pro, good long, except for ER. Oh, yeah. So right now, G-Pro, I definitely wouldn't be short, but I wouldn't necessarily be long. Would you buy True on a positive open? Yes. Yes. Now, there's a lot of times where people say, well, if you cover a short position, is that time to buy? Well, sometimes there's really no strong buy signal. But in this case, we've got a series of dojis and a gap up doji that fits open positive. Where's my likely first target? More than likely up the 50-day moving average. Stochastics tell me I've got enough room to get back up there. Then once it gets there, we see whether it gets through, because there's still a gap right here to fill just above the 50. What is the invisible support that the Dow Jones is respecting? Well, first of all, you had the 200, and then notice where it bounced before, right about the exact same level. So there's kind of a support level right in here. Okay, let's see what else we got here. Oh, same scenario. We had shorted NNM the other day, but then there was a bullish Harami, which makes it or bullish Harami doji, which makes it very simple. It better open and trade lower. The fact that they gapped it up today, not only up above the 50, but above the T-line, told us that's a lot of strength for a stock that's just had a bullish Harami. We better close out that position very quickly. Now what do we have? Now we have a bullish Harami followed by a gap up. That's pretty much your best friend. You want to be looking at this one seriously now as a buy. And is this a good buy from this level? Where's our next target? Possibly the 200, but there's a gap to fill right here. So even if it only came up to the fill in the gap, that's still a 10% return. If it came up here, that's a good, let's see, 3.5 points on a $13 stock. That's about a 30% return. So some of the biggies are still acting well. And this is why you want to respect the gaps. Because notice what we had here. We had our little bobble, and then they popped it. And what happens when they pop it? There's usually follow through. I say usually follow through. That's where we kind of identify that 45 degree. And we saw that same scenario in Netflix when it had the big move to the upside. What is this thing up here? Had a nice move afterwards. Now notice the pullback. This is why you want to know the characteristic of each of your candlestick signals. Notice the characteristic of this pullback. It's not very decisive. If they're pulling back after a strong uptrend with an indecisive nature, more than likely this is profit taking. Get ready for the J-hook type pattern. Will it do that? Have no idea. But the expectation is this is what normally happens when they pull back and there's not a real strong pullback characteristics, is that they're just taking profits here ready for the next move to the upside. Yeah, you could have a wave 1, wave 2, going into wave 3. Don, we should do this later, but since we're would candlesticks on 11/24. There's 11/24. If this is 11/24, this is not a reversal signal. That's a nothing. I just told you there's probably going to be some upside. Just when I see something that's moving up and there's no reversal, I'm kind of looking to the next, January 14th. All right. That's not a real strong reversal either until they close it above the T line. Now you get a signal here, which is your doji sandwich. So this wasn't a true reversal signal, but it did close back up above the T line. That told me there was going to be a bounce, and then I'll watch to see what happens when it gets to the next resistance level. In this case, it went right through that resistance level. So even though there's a reversal, in this case, you could almost draw a line right straight through the bottoms. That even though there wasn't a clean signal, and I'm going to go over here because sometimes the feeds on, even over on some of the other charting services, it was just kind of a reversal. Even though I might be a buyer, I'd be a little bit more diligent to see what happens at this level. If a gap down is from price action in global Globex hours, light volume, why is it considered a strong indication of investor sentiment? If a gap up or down is because the price, even in that global, is still going to be a reflection of where they open it on the New York or whatever index you're watching. So even though they're trading up on the global, it's where the market where it opens itself on the daily. So it doesn't really matter what it's doing on the global, just where it opens on the New York exchange. When you say wave one, wave two, are you talking Elliott wave? No, just waves. That price moves in waves, and I'm not going to be in a stock long enough to evaluate whether you're in wave 4, 5, 6, 7 ABC retracement. I just want to see if I'm in a wave one, wave two, wave three type action right now. Some stocks are foreign ADRs. Yes, no, usually, they'll gap because they are traded over on other exchanges. We'll look at IMGN here in a little bit. And so we did Netflix. We had recommended ADP a few days ago because of the, this isn't right. That's ADP. APD, how's that? There we go. Kicker type signal. That's usually a very strong signal. Now, a true kicker signal wouldn't have the tail to the downside, but it still kind of represents the same thing. There's been a strong change of investor sentiment. That same type of chart was seen in Flex, another kicker type signal. I wouldn't be afraid to be buying either one of these on positive trading tomorrow. So because crude oil prices, now again, prices move based upon investor sentiment. Now, we just did the illustration that even though gold was not going anywhere, some of the gold stocks were acting well. That has a different correlation because those may have already be contracts. Now, why gold prices are moving well when gold isn't, that may be a little bit more sophisticated than us to try to figure out why, because there's probably something going on in the industry. But we can pretty well be assured that if the prices are moving up, even though gold prices are moving down, somebody out there is buying. And one of the things that we want to be conscious of, chart is crude. Yeah, this chart is the crude oil chart right now. Yep, crude inventories will be out. But right now, it's telling us that they've broken this downtrend, that this is probably where at least we'll see a bounce for a while. Whether it lasts till Wednesday, don't know. Might last for 3 weeks, might last for 3 months. Again, each time there's something that comes out, it's still because people are buying or selling, or people are buying and selling, even though there may be news coming out, they've already built that into their decisions. Crude oil over on, this is on the CQG charts, is CLAH5, which is the March crude. Now, on the Dow, there's a U.S. crude fund, which correlates with the buying crude. You have SPAC class, CL, and then whatever the month is, H. March for 215 would be H5. Let's see. So, anyways, where was I? All right. So, with that, we've been we're about ready to start buying WLL back again because the pattern is starting to set up. This is a nice little cup and handle, but if they break through the 50, they could be moving back up to this level. That even at that point, that would be about a 40 or no, more like a 60% return. And then because what we've kind of dug up based upon the fundamentals of Whiting Oil, because of their participation in the Balkan field up there in North Dakota, that now that the investor sentiment is changing again for the oils, that this might be a good time to be buying. Now, is this because people are buying this stock specifically? No, when we can start seeing that a lot of the energies are starting to move back up, like BBEP or BCEI, all of this, there's that little morning star signal right here at the breakout area. Let's see, AREX. There's that little morning star type signal right at the breakout area. That's one that should be looked at seriously tomorrow. When you start seeing the whole industry moving, it's not the little guys that are coming in and buying. It's more than likely the big guys now deciding this is the time to be buying. Here's SN, nice big fry pan bottom. Makes this entry very simple. If they start trading above the 50, which means they're breaking out through this level, coming out of a fry pan bottom, that means they're breaking out. Your next target is going to come up here and fill this gap. XOP setting up nicely also. A little bit bigger of the small oils. And NOG. Whoops, I might have goofed up on NOG. A nice cup and handle just closing above the T line or the 50. There's XOP. That looks a lot better now. Cup and handle. Let's see, your SN chart is wrong. No, that's even better yet. Yep, so these are good-looking charts. And I say good-looking charts, it's because we can look at a bunch of them, and they all look good. It's not because the little guys are out there buying the oils. More than likely, the biggies are coming in, and they're buying oils across the board again. Well, the reason I would be going after Whiting, both on a trade and a long-term investment, is because of the magnitude of the return that could take this stock right back up into the hundreds again. Those gaps most likely will get filled. Yeah, gaps usually get filled. Now, they may not get filled this week, this month, this year, but they usually get filled. But if you start seeing a price action that starts taking you back toward one of those, that's more than likely what everybody else is watching. So you just keep long until you see what happens when it gets to those levels. This is Michael's, which has also got a nice little J-hook pattern that you might want to keep an eye on. So there's a few more oils in here. EVEP, a little gap up through the T-line, breaking this downward trend channel. That could move from whatever this was, the 1542 back up to the 21 range. That's a good 25% return. Let's see. Abercrombie, nope, no, this isn't Abercrombie Fitch. This is ANW. This one could be breaking out. So when I count waves, I mean, this is wave 1, this is wave 2, this is wave going into wave 3. When this wave is over, I don't give a hoot what happened here. I'm more interested in what's going on at the end of that wave to see whether that's going back, pulling into what now would be wave 1, wave 2, wave 3. So I'm not counting waves as an Elliott wave. I'm just counting waves that I know prices move in waves. And they usually are in a J-hook pattern or a wave 1, 2, 3 pattern. Okay, let's see what else we got. ARRY. Notice where this broke out of this low curve breakout. Very strong price move. Now, notice the pullback. Not real decisive, and where do they come back to? Right smack dab to the T-line. If this starts trading positive, telling us the profit taking's over after they've hit the T-line, the reason this had a strong price move was because everybody was trying to get in here with something that told them they wanted to be in with great enthusiasm. Then there's profit taking. And when the profit taking's over, what's everybody think? You want to get back into this move with great enthusiasm. That's why usually this move, wave 3, is usually the same as wave 1. Oh, they got earnings tomorrow? All right, thank you, Don. So I'll keep an eye on this one and see what the results are from the earning, from their KMT. This is what you call a belt hold signal. For new folks, a belt hold is very easy to identify because it opens way outside the trading range and then comes back up into the trading range. That tells you right away that they've just wiped out a lot of the sellers. The next move is going to be pretty strong because most of the sellers are out of the way. It usually instigates a very strong price move. That was kind of the same scenario that we saw this morning on the 10-minute chart of cattle. Oh, right here. They wiped out a lot of sellers, had a move, and then how long was the move until you see a sell signal? Somebody was asking about PER this morning. That's just a nice little wave 1. Notice what it did. It bobbled up here, came back to the T-line. T-line crunch, pushed it through. Notice how it went through. It gapped through this area, which tells us that the 50 is not acting as resistance. Where's your next likely target? The 200-day moving average. Now, will it move up and pull back? Could be, but we'll analyze that once we see that to see whether it's going to support at the T-line and start back up again. IMGN, we recommended this morning because of our best friend signal right here. The doji gap up through the resistance level coming out of this little fry pan bottom. Well, it didn't execute. Needed to open positive and trade positive because that would have told us that the profit taking of yesterday was over. It was time that the buyers are still there. You could get in immediately. The fact that they opened it lower and traded it down told us it wasn't time to get in yet. Where is the time to get in? If they open this and start trading back up through where they close it on Friday, that tells me the profit taking's over. You want to be buying. Why do you want to be buying? Because the best friend signal is usually a precursor to a very strong price move. We're just now waiting for the opportune time to get into that trade. HLT, HLIT, same scenario. Notice the kicker signal. Opened here, closed here, gapped up above the previous day's open and started going this direction. And where did it move when it went that direction? Broke out through this area. Let's make this a little bit smaller. Oh, pshaw. That tells me we're in a strong uptrend. With at least a 45-degree to come off of here. Okay, what have I missed so far up here? Let's see. This is a kicker signal. A lot of people see this big gap down and say, oh, what do we do here? Well, if they've didn't show any buying by the end of the day, that tells me that kicker signal is going to start taking you even lower. There's that doji gap down on FCN. Where did it close? Right here on the 200. Makes this very simple. Even if they open this positive and start trading up, you can put a sell stop right here that if it came back down through that level, they're still confirming this gap down from a doji. And they're telling us if they open higher and start trading back down below the 200, the force is still pushing this down. They're not going to support it at the 200 anymore. I think we saw that same thing over in SDX where they gapped it down. They tried to bring it up one day to the 200. You still stay short on this one. And Dix was the same scenario where they gapped this down but took it back up. I mean, look where they opened it, just slightly positive and took it up, so you wouldn't have executed your short trade. However, it still has a doji gap down. Makes for a very simple entry. If they came back down through this level, that tells me this short covering is probably over. They're still heading down. Now, a lot of people say, well, if it opened here and started trading down, wouldn't you lose all this opportunity by the time it finally got back down here? Yes, but I want to have the probabilities. I'd rather short something right here, knowing it's going in this direction, than short something up here and not knowing whether they're going to move sideways, up, or down at that point. I'd rather make less money with a much higher degree of probability than try to make more money and not know which way something's actually moving just yet. And that kicker signal, this is from Beazer Homes. Those had a kicker signal to the downside. So there's our wave 1, wave 2 had gone into wave 3. There's that kicker, well, not a kicker signal. Notice they opened it lower, but where did they open it? Below this support level. Next day, they told us that the buying had stopped, and then we had a doji gap down again. That tells me we're still in this wave 1, wave 2, wave 3 action. Bet you can stay short on this one. And a few others that we had that looked like they were acting good. Fold a while back looked like it had a good opportunity after a hammer signal with a bullish engulfing. That's a very strong buy signal, except the next day it didn't execute. The next day it didn't execute. By the third day, with them closing more than halfway down this candle, remember this was the candle that told us the bulls were in control. Just have a very simple analysis. If they can close more than halfway down the candle that told us the bulls are in control, the bears are still in control. So this looks like it's still rolling over. Where's the next likely target? All the way back down here, the 200-day moving averages. Yeah, wave 2s are usually the consolidation or profit taking after a strong wave 1. And Jiva, there's your left-right combo. There's again, the failure of the T-line, and then selling off. Where's the next likely target? The 50-day moving average. So this is why it's beneficial to see where the signals are occurring and whether they get back below the T-line, telling you that there's been a change of investor sentiment. Here's another one where we had a big, huge hammer signal, then a doji, and then a left-right combo, pretty much telling us they aren't getting up above the T-line. Where do you think the next target is? Probably right back down here to this level, which kind of coincides with the next few days where the 200-day moving average will be sitting. So is this worthwhile? Well, this is about 3.5 points on a $27 stock. I can figure this out. That's a little over 10%. That's worthwhile, both for an option trade or a stock trade. And we had been long TESM until we saw the gap up, shooting star, and then a bearish engulfing. So notice where you are in stochastics. So if this was a breakout, which it had been doing, this made it very simple. If you start seeing them gap up and trading up, just very simply put your stop at the previous day's open. Because if it comes back down through there, where do you think the first target's going to be? Back here to the T-line. Is it going to bounce from there? Have no idea, so why take the risk? Close it out here. Worst case scenario at this point was they brought it all the way down, and then they brought it back up through that open. You could always buy it back, because that pretty much would tell you at that point you've got a candle that looks like it came down here and started back up with a big tail. You're staying above the T-line. On the other hand, notice what type of signal they did do today. A bearish doji sandwich. Tells us we want to be out of this trade. Now look for the 50-day moving average. That same scenario occurred in Whale Pasha. Hold on, I'll figure this out. Hold on, I'm thinking. Oh, is it PESM? Notice you had a bearish harami, a good distance away from the T-line. It opened positive. If you closed out your position right here, which is the likely spot, because if they opened it here and started trading it off, where do you think they were going to? Back down to the T-line. But once they got down here, notice what happened. They brought it right back up through this level. You could always buy it back, because when you sold it, you didn't know how far they were taking it down. When it was moving back in this direction, which way were they taking it? Well, they'd already bounced off the T-line. They were still taking it back up. They weren't closing below the T-line. So you kind of eliminated your risk factor by getting out of the position and then getting right back into the position, eliminating the fact that they might have gone this way. You're still in a good long position. The dragon, or Japanese traders, their own name for bulls and bears, dragons and tigers. All right. Okay, and let's see. We were still short YNDX. Again, there's your wave one. There's kind of your rounding dumpling top, wave two. Now you're in wave three. Now it did do a doji hammer type position away from the T-line. Makes this very simple. If this opens positive tomorrow, you close out the position. If it comes up and fails, you can always reshort it, or if it opens up and you close it out, you can always put your sell stop right here, because if it opened up here and came back down through this level, that means they aren't buying yet. Did I just say ain't? I meant to say ain't not buying yet. You still want to stay short. Okay, I guess that's about all I've got for tonight. Are there any general questions on candlesticks? Oh, the beginning and end of each wave. You can calculate that if wave one is this amount, so you can pretty much calculate it, that if this is 26, and let's say it moved down here to 15, 11 points. All right about here, 11 points from this level could take you all the way down, supposedly down to 4 or 5. But more than likely, it's going to take you down some distance. And so on bigger stock prices, let me see if I can find one where a wave, let's say, let's say if this is wave one, this is wave two, wave three right here, it's going to be approximately the same as this wave right here. Where should I place my stop on YNDX? As I said, if this came back up, more than likely, if this came up through today's high, you'd probably want to be getting out of it, because what are we seeing down here? We're in the oversold condition. We've had a spinning top. We've got a long-legged doji hammer type signal. If they start trading up positive, where do you think their first target is going to be? right up here to the T line, which would be a good percentage move. That'd probably be about a 10% move to get back up there. I'd cover out the position. Then if it turned around, you could always reshort it. Let's see. How much importance do you give to support and resistance? A lot. Because I'm not looking at support and resistance myself. I know everybody and their brother is looking at support and resistance. So if we can see something that is starting to support right on a major moving average, that's the exact purpose of using candlestick signals, because they are the formations of what's going on in investor sentiment. We can see immediately. I'm trying to think of one that's supporting on a major moving average right now, and I can't think of it. Right now, this one, SDR, I would look at saying, all right, the T-line was acting as support. If it had broken back through the T-line, if I can see the T, where do I not want to see it close? Back below the T-line, because that's what's acting as support. Can you go over playing the VIXX? I don't play those very often. Let's see if I can get them over here. VIX. They don't come up on this chart for some reason. Is GM, oh yes, I'm sorry, I am short GMRC on some puts, but it did come up today. So what is this reversal signal? Let me make this bigger so everybody can see it. What was this reversal signal today? Anybody? Class? Evan got it right. None. Because where did it open? It did not open below the previous day's low. So this is not a piercing signal. All this is an up day and a downtrend. Now, if it opened positive tomorrow, I'd probably, depending on what the market was doing overall, I would probably go ahead and close out the position. But then if I saw it trading right back down into this candle, I'd probably reshort it. GMC has earnings tomorrow, and I guess, so what time do they announce their earnings, Don? If they announce it in the afternoon after the close, it's open positive and start trading off, remember, probably there's a lot of people out there a lot smarter than I am, probably a lot closer to these companies than I am. They're going to tell me whether they think the earnings are going to be good or bad. Wednesday's afternoon. Okay, thank you, Lori. Okay, let's see if I missed any more questions, general questions. There you go. Okay, CJ had it right, an up day and a downtrend. Okay, I guess with that, Jim, go ahead and do the double line. And do the next double line. Apple on a target. Well, right now, as we can see in Apple, it's doing a nice big fry pan bottom. And this is the pattern we call the message. Notice how they gapped it up. Even though they gapped it up, they traded it off. That doesn't look real positive, except for the fact that they closed it here and they gapped it up here. There's a message there. People are trying to get in this. So what's that usually telling you? Watch for the profit taking to be over, which was the next day. Right now, I would suspect a 45 degree, and that 45 degree would further confirm my fry pan bottom. You just stay long until you see a sell signal. GG, another J-hook type pattern setup. Notice how they pulled back, consolidated right here in the 200. I'd be ready to buy this at 25 bucks, knowing that it broke out to the upside. And then JCPenney, I skipped JCPenney earlier, right before waiting. This one you get ready to buy, especially if they can. Now, so here's this is a good one. Where were they buying this one? And you think it's the little guys or the big money? The big money are probably buying JCPenney. And where were they doing it? Right smack dab on the 50-day moving average area. So they've done a left-right combo, bullish engulfing. Stochastic starting to curl up. They couldn't get below the 50. And so what's our entry strategy? Well, we know if they open this positive, they're confirming our left-right combo, number one. And number two, they're telling us the T-line's not acting as resistance. Number three, this downtrending channel is not acting as resistance. So a positive open tomorrow. You can be buying this both for a trade and a long-term hold. Is market in wave 3? No. The market right now, after this big price move, I would call this whole move right here wave 2. But as you can see, wave 2 is a wedge formation. Let me do this. You can pretty much draw a line down through the tops. You can pretty much draw kind of a, oh, that didn't work out well. Got kind of a wedge, not a clean wedge, just kind of moving sideways. You also had this little downtrending channel, but the anticipation was that this slow downtrending channel was going to move to where they could test the 200-day moving average, which they did today. More so in the NASDAQ, you've got this kind of wedge formation, and now you've got a hammer. You're right back in the middle. So basically, it's not telling us that this market's going up or going down, but it is in wave 2. This is a big sideways wave, and I mean that's just using general wave analysis. That if this is wave 1, this is wave 2. All we need to do is watch to see if they break this out through this level. We're probably in wave 3, which more than likely is going to be the same magnitude as this move right here. ISIS failed because it traded back below the T-line. Now notice when it got back below the T-line, it's not very decisive, but it needs to get back up. This should have been out of this one on the bearish engulfing signal. And why would this bearish engulfing signal be any more critical than over here? Because notice what the trajectory of this market or this trend is by the time it got to this bearish engulfing signal. It wasn't going up. It was moving sideways, and now they're telling they're selling it off. Will I be buying this back? Yeah, definitely if it comes back up through the T-line. And GMCR, we did that one. Just an update and a downtrend, but definitely want to see this open lower tomorrow to stay short. And SWKS, you stay long on this as long as it stays above the T-line. Outerwear, outer wall. Notice the failure here. Now you do have a little bullish Harami hammer signal with stochastics in the oversold area. Would I be buying this? I'd be buying it if they could get it back up above the T-line. Would I be shorting this? If they open lower after a hammer type signal, that tells you what the attempt that the bulls made to bring this price back up and they open it lower the next day, that tells you the bulls didn't win. The bears are still winning. You want to stay short. BABA, you just stay short right now until you see a buy signal and a close above the T-line. You can see what your downtrend was doing. They gapped it down, but they didn't gap it down in the oversold area. So this is still part of the trend to the downside. Telephone I don't trade because it's just too lethargic. Even if it moved up from here, the percent return would be so small it wouldn't be worth doing. This is the institutional trader where you come in with a long-term hold. So I wouldn't be doing anything with this one either right now, even based on that chart. Not anything real exciting. And it was an Alcatel, Lucent, still kind of a sideways channel. Wouldn't be long or short. And This one's always had a hard time getting out of its own way. It's more of a research firm. LNG, very slow uptrend. Another one that wouldn't really entice me very much because of the lack of return. Neighbors, this one you get ready to buy in the little cup and handle if it comes up through the 200 or through the 50 tomorrow. And Halliburton, same scenario. You can be buying this one on positive trading tomorrow, the little bobble right here at the 200. Tesla needs to get through this downtrending channel, which it looked like it might have done today. It still needs to get through the 50. So you can stay long on Tesla. Just be aware of the resistance levels it has to get through. I'll look at that, but I think you've got better ones. If you're holding Tesla, you hold on to it. It just isn't very enticing based upon the resistance levels, and you're starting to run out of steam on your stochastics. Now, Amazon, this one, again, we had a very good trade. I guess Nora picked out that right before earnings, we bought the 335s and sold the 337.50s. I think you guys got better prices than me. I think I paid 61 cents, and you all were buying it for 51 cents. But by now, it should have popped up to where it's around $4 or so. So that was a very good trade. Now, that was a way, again, this is why the options room is good for coming up with strategies. This one had a risk of 50 cents to make 250 or 5 times your money, versus if you just bought calls outright, your return would have been much smaller and your risk would have been much greater. ZIOP, after hours, what's it doing after hours? Still a good looking chart as long as it doesn't close below the T line. Whoops. In CAMT, this one was a failure. I mean, it gapped up. The message would have been that if they had kept it up hefty, you would have stayed in it. But the fact that they could bring it almost back down, and they almost did, right back down to where it opened, that were closed the day before, told you there wasn't a lot of buying in this one. I wouldn't be, if this opens sluggish tomorrow, I'd close out the position and find something else to trade. It would need to open positive and immediately start trading positive to stay in it. EDAP, that's a good J-hook pattern. Just make sure your volume is good on that type of stock. And Costco. Costco is just about ready to break out. More of an option play. I wouldn't be afraid to do some options on this one. CSTM has just been lollygagging here recently, but it hasn't been able to get back below the T-line. You stay long as it stays above the T-line. And Halo, one of the small oils, no, therapeutics, I'm sorry, had a J-hook pattern set up, but right now, this is one thing to keep an eye on. Whenever you see a flat trading area and it ends with a doji, watch to see how they open it the next day, because that's usually tells you after this indecision, and the final indecision was a doji, the way they move it after that is going to tell you which way they're going to move it fairly strong. AG. Nothing to get real excited about just yet. I would rather buy it on strength, knowing that it broke through this downtrending channel, which means your next target is the 200-day moving average. AMBA, the same thing, moving sideways. I would rather buy it once it's broken through this downtrending channel. For right now, with it trading below the T-line and you're kind of drifting, more than likely it's just kind of waiting for the 50-day moving average to catch up to it. ATH, retro. No ATH, Gordon. That might be a lap. BITA, you stay short on this one. Why? Notice what happened after your shooting star. They slammed it. Not only did they confirm the shooting star, but they failed at the 50, and the T-line, and the 20. And now they got the slow curve. Big Al, that's probably one of the ones you want to look at for put trade tomorrow in the options room. And we did Apple. Uh-oh, I lost my spot here. Bank of America. Bank of America, an institutional trader. Right now, I wouldn't be long or short this one. I'd be short if it came back down through today's open. I'm sorry, through today's low. That would be your bearish J-hook pattern setup. And TPC, another one that I wouldn't be too anxious to get into until it gets up through the 50, because there really isn't a reversal signal here. It has to break this downtrending channel. Wouldn't be one of my favorites to get into at this point. And con, nothing here to get excited about. Now, it is doing a flat trading. If they gap it one way or the other, that's what you want to do. NE, little cup and handle, you can buy this on positive trading. Whoops, don't want to do that. Boeing, you stay long. Ever since it did that doji gap up through the resistance level, you stay long until you see a sell signal. VG, bullish engulfing on the J-hook. You can buy this one on positive trading tomorrow. J-hook confirmation. Zoes, stay short on this one. And Coke I don't really trade or even follow because it's such a slow percentage mover. Right now, I wouldn't be long or short on Coke. Just no direction to it. Pfizer, you stay short until you see a buy signal. Now, you had the bullish Harami hammer at the 50. Makes it very simple. If they open this positive, the next target's going to be up at the T line. So you'd probably, if you were short, you'd cover that short position immediately. And VDSI, you stay short on this one. As long as there's nothing showing a buy signal, stay short. Probably going to the 200. And AMP, you should be back out of this one. Once you saw that bearish engulfing signal, at least you kind of factor that if you didn't get out of it the next day on weakness, that you would have a bobble, but it needed the support of the T-line, which in today's case, it didn't support the T-line. This is one that would be out of now and wait for a reversal J-hook pattern setup. CEMP, this one you should have been out of today with the evening star signal for two reasons. One, because it was closing below the T-line, and two, look at the trajectory of that trend at this point. Not very enticing at this time. Goog, nothing here. If you're long, you stay long, but that's not a good-looking chart either. Now, a lot of these stocks or a lot of these charts aren't going to be good-looking because the market's been so wishy-washy that there's really no trend in some of these stocks. What about FOMX? That's a nice little stock. You stay long on this one. NX, that's a nice J-hook pattern also. First little target is going to fill this gap. Second target should be the 200-day moving average. Let's see, MVIS, bull engulfing, followed by Harami. Your stochastic's heading down. You can see there's no direction. I wouldn't be long or short this one right now. I would rather pay $2.20 knowing it broke out of this congestion area. IMO, this one you can be buying. This is the message right here, was the gap up through the resistance level. It needed, after yesterday's profit taking, it needed to open positive and trade positive, which it's doing. I would suspect you're at least going to be looking at a 45-degree on this one. And Chris, another one you can stay long on, a little J-hook pattern setup. Hershey's another one that doesn't have a whole lot of action to it because it's an institutional trader. Bought May 95 calls today. You're probably going to make some money on it, but not a huge percentage, I think. So we did ISIS. DEC's another one that I wouldn't do anything right now. If I'm short, I'd stay short. At this point, I'd probably use the highs of today and yesterday, but if it came up through there, that tells me the buyers are in. But if I was short, I'd cover my position at that point. And EBIX. Nothing here to get excited about. I'd rather pay 24 bucks for this knowing that it broke out to the upside. Vail. Nothing here exciting. Not a reversal, just an up move in a down market. I'd be trading something else. SLW, is that silver? Another one that I wouldn't do anything until it broke this little downtrending channel up here. I hate that thing. Right now, you're just kind of stuck in a sideways. And what did I just do? WKS. No, you just stay long on this as long as it stays above the T-line. I wouldn't want to see this open and trade off tomorrow. Yes, it's probably too late to get in. It's in the 45-degree. If you get in, you just make a very tight stop because at some point, if they start reversing it, they're going to reverse it fairly fast. And good to see you again, Peg of the Lake. TLT, just stay long. Speaking of Peg of the Lake, we will be doing another private training session at Cuca Lake this summer. So if you're thinking of doing private sessions, if we don't do one here earlier in the Pittsburgh, right at my resort home, we'll probably do them all up at the lake. So I think we've got the first or the last week of July and the first 2 weeks of August. I think it's the first and second week of August. I'm sorry, last week of July and the first week of August. So if you've got any interest, that's kind of what you want to mark your calendars for. Let's see, VXX, just nothing exciting at this point. And TRMK, nothing here to get excited about. It needs to get it back up through the T-line. UBNT, that's got the little scoop type pattern, Morningstar. This one you can be buying. Just be aware that you're in a flat mode and you might not get a whole heck of a lot out of it. And DNR, this one you can be definitely buying on positive trading tomorrow. ACHN has just not done anything inspirational. I mean, you're basically at the same level as trading 2 months ago. There's just no trend to this one. I'd have my money someplace else. HMIN, left-right combo. with a bullish confirmation through the T-line. You can be buying this one with the possibility of going back up to the 200-day moving average. What is that one, Mary? Is that ILG? LLG? Whoops. You might have to do that all in caps. T2. T2, just a slow, steady uptrend. You stay with this as long as it stays above the T-line. I'm going to try Guild. There, Mary. Yeah, that's what it was. Guild, okay. This one, especially if it comes up back up through today's high, you want to be buying this one with some enthusiasm. That would be a J-hook pattern breakout. And FXY, nothing here to get real excited about just yet. Even though it is doing bottom action, this is the yen. Just nothing there to get real excited about. And ENPH. Just stay long as it stays above the T-line. Twitter. Another one that's just sideways. I wouldn't be long or short this one. Just nothing there. And CCJ. CCJ, you could be buying this one, but I'd suspect because there's really no commercial, no reversal signal, that when it gets to the 50, that's going to be something you watch with great diligence to see if there's going to be what type of signal it does at that point. AEM, you just stay long on this J-hook pattern. Quick review of the wicks. The wicks are where it's traded during the day. This was the low of the day. This was the high of the day. So it traded all in between. And this is where it opened, and this is where it closed. The box is where they open and close. The wicks are the trading range. And you get a little bit more information based on the wicks. For example, they took this all the way up, touched the 200 and failed. That pretty much told you with that big wick to the upside that the bears had taken control once they hit that level. Southwest. Southwest, you should have closed this one out with it trading below the T-line with the idea that you could always buy it back on a positive open today. And junk in the box, just slow, steady uptrend. You just stay long. Corning. Corning, you just stay long as it stays above the T-line. Martine, ask that question in here. If somebody can help Martine on TradeStation. Rite Aid, notice how Rite Aid came right smack dab to the 50. If it opens positive, you can be buying with the idea that it needs to get back up through the T-line very quickly. We did Twitter. Oh, Zai public offering, so that means it's going to trade down. But even though they offered a public offering, is not for a stock, so you watch the knee-jerk reaction and see when the quick selling is over. If it's been in an uptrend, which I think Ziap has been, these are the ones where you see them open lower, and then after a while everybody realizes just because they're putting out new stock they're doing it for a reason, and they start buying back in again. Tazar has gotten flat. I would be out of this position, but you can always buy it back on the next buy signal. Oh, I usually trade off of Thinkorswim only because I'm trading stocks, commodities, options, and I can do it all from one account, so it makes it very convenient. Home Depot, just a very slow, steady uptrend. Nothing that I would trade. That's more of an institutional trader. Is there a time at the end you can see if Ford Ford, I would be buying long term when it broke out through here, if it breaks out through here, and then just see what it does at the 200. If it stays above the 200 after that, you stay long. ATHN, nothing here. It did come down and hit the 50, but notice your stochastics aren't over with. There still could be some more downside to this one. So if you're short this one, which you should be after the evening star signal, right about the same level it topped out before, you stay short until you start seeing some buy signals. Yelp, nothing here in Yelp that would make me want to go long or short. That's sideways. DGAS on a double top, that you won't find out until you see what they do tomorrow. Now notice you're still trading above the 3T line, which is usually a sign that the strength is still there. However, if it did come back down, let's say through the low of yesterday's doji or Friday's doji, you got to take profits because that'd be a good indication they're going to bring it back down to the T line. Oh, yes, ride curve, I am. I've just been stuck in some other projects right now. Just keep reminding me. I will do the trading rules, try to get them all in black and white somewhere for everybody. Just keep reminding me. Right now I've done we're starting to take out some of the, I mentioned this in the chat room today, that we've done the video on the quantitative signals, meaning which ones are the strongest, which usually starts with the, as number one, the best friend, the doji, followed by a gap up or a gap down, depending on which direction. Then the next one is your left-right combo. So I'm doing 15-minute videos to kind of explain those with great, much greater detail. So that's the project that I'm working on right now, and that should be available fairly soon to everybody. Exxon, another one that wouldn't be long or short, just not enough magnitude of movement in this one. AMBA we did. AMBA's kind of moving sideways, probably waiting for the 50 to catch up. I wouldn't be doing anything in AMBA right now. MCHX doesn't have any real great enthusiasm to it. I wouldn't be long or short this one. I'd be someplace else. And ePay. ePay, there was your message. The gap up, the pullback, and then today told you the profit taking was over after they hit the 50 and the T line. I wouldn't be afraid to be buying this one on positive trading tomorrow because the message tells you somebody was trying to get in with great enthusiasm. This is a long-legged doji hammer that just hit the 200. If it opens positive tomorrow, you can be buying immediately. Just be aware that there's not a whole lot of magnitude of move on this one either. Gene, that one I'm suspecting is coming back to test the T line. Let's see, Loco. Loco needs to open positive and trade positive to stay in it. Okay, I think we got most of them. Let me make sure. Okay, well, since you weren't going to ask, what the heck, we'll do it. What the heck. INVN, just stay long. If you closed out on Friday, if you closed out on Friday, you should have bought back today. If you closed out on Friday and needed to open positive and trade positive today to stay in it, so right now, if you're long, you stay long. Oh, Sean, that's probably more analysis than what I could give you. The only thing I can tell you is the oils are being bought, and they're being bought across the board. It's not like one or two of them are being bought because they're doing better than the others. They're buying all of them, which means somebody out there thinks crude oil out, which we can see very easy. based upon our charts. So we had a Morningstar signal. Today they use the T-line as support, trading up. Where's the next likely target? Back up here at the 50-day moving average, which would mean that would start pulling up a lot of these small stocks again. Can you talk a bit about the options chat room? Anna, we've got about 50, 55 people in the options chat room. And the reason for it was that combining there is no last chance. Oil has bottomed. I would guess that oil has bottomed. But it doesn't matter what I think. Right now the charts are telling me they're bouncing it at least. I can remember, I forget how many years ago it was, where crude oil went from $25 to $50 a barrel. And at that time, that was excruciating highly high. And everybody was saying, man, oil won't go back down. Oil went back down to $10 a barrel. So I guess this is where you never say never. The fact that maybe crude oil can never go back down. Crude oil can go anywhere it wants to, depending on the markets out there. All you have to do is all of a sudden have too much oil where they can't put it any place. They've got them stuck in the tankers and can't find places to store it. You'll see oil prices come crashing down, which obviously they already have over the last whatever time frame. Last 6 months, it's gone from $125 a barrel, at least $100 a barrel, and now we're down to $45, $50 a barrel. Back to the options trading room. So the reason we opened up the options trading room is that I should be a little bit more diligent about being over there more, just with a lot of things going on in the last couple of months. But the options trading room is more to talk about the strategies to use on specific chart moves, so that all that verbiage wouldn't be having to be going through the normal chat room and kind of confusing everybody that didn't know about trading options. But for somebody that's more interested in options, it's a separate service. There's 55 people or so in there every day. And it's more that if somebody sees a trade that you just don't go out and buy calls or puts, somebody will come up with an option strategy that makes sense, like a spread or a straddle or something. So it's more of a situation where we're trying to teach people what option strategies to use with specific chart patterns. Okay, I guess I babbled on about that. Let me babble on about something else. BICM should have been closed out today with the idea that it can always be bought back, but you had a hanging man, you had a shooting star, now you have a bearish left-right combo. Pretty much tells you the bears are starting to take control. Should have closed it out today. You can always buy it back if it came back up through the T-line. Could you sometimes talk in the future about pricing options? I can do that. I don't care too much about pricing options. I usually just try to figure out which one. There's only two factors that you want to know about or trade options. One, what's the chart doing? That's always the first criteria. And then two, which trade or what style of trade, whether it's a spread or buying the calls outright, makes the most sense math-wise. So got the chart and the math. That's what makes for good option trading. Okay. Martine, I don't think you do, but just email Abraham. He'll have the answer to that. So anyways, with that, everybody, we'll call it a night. Everybody have a good evening. I kept you way over time again. We'll see everybody bright and early in the morning. Wear your snow boots. It's still snowing out there.